Hey folks, Stanford here, the rate update, where our goal is to help you guys make the right decisions when it comes to real estate, especially with all your financing needs. So if you're new to the channel, please make sure to subscribe and also check out all the content we have below to help make that decision making that much easier. So let's get on to the mortgage morning update to let you guys know where mortgage rates are and where they're heading for the day. Okay, so here we are. Unless you've been under a rock, you know the Federal Reserve is all over the news and inflation is the enemy. So what's happening right now is prices on everything is skyrocketing. So the Federal Reserve has two mandates. One is price stability, which is inflation, and the other is full employment. Okay, those are very hard to juggle because when you start raising interest rates dramatically, which they're saying they have to do, it's going to start affecting the markets, the corporations, and it's also going to probably start pushing up the unemployment rate. Okay, so they have a lot of things to tackle right now. So in front of the news or on every news headline, you're going to see this. But the Federal Reserve is acutely concerned about inflation, seeing deliberate rate hikes ahead. Other people on the Fed that sit on the Federal Reserve is saying, we got to start increasing rates to curb inflation, plus we got to start selling mortgage-backed securities and other corporate bonds. So basically, here's what happened. About 2-3 years ago, the Federal Reserve stepped in and they said, okay, we got to help this situation here. So the biggest thing we learned from years ago is we can't afford a housing crash. So they went in and they started buying mortgage-backed securities. It's a bond on Wall Street that is the biggest component or the factor in your mortgage rate. Okay, so they started buying and buying and buying and buying. That would drive up the prices because there's more demand for that bond, and it would drive down the yields. Well, the yields on that is your mortgage rate. Okay, so now what they're saying is, wait a second, we got to start pulling all this back. So they came out and said, we're not going to buy any mortgage-backed securities anymore. So that actually reduced the demand for mortgage-backed security bonds. That alone pushed down the price and up rates. Well, now what they're saying is we're probably going to start selling off those bonds, even putting more supply in the market. What's that going to do? Well, it's not going to be absorbed because a lot of people aren't buying mortgage-backed securities right now. So it's going to push the prices down even further and rates up even further. We start this off by what's the economic calendar for today? Well, the biggest news out that's coming out later this afternoon is the FOMC meetings. And we can see that right here on our calendar. Okay, again, what are we looking for in this situation? Well, we're looking for clarity from the Fed because the markets are in turmoil right now. They're like, are they going to go 50 basis points? Are they going to go 25 basis points? Are they going to start selling the mortgage-backed bonds? Are they not going to sell them? What's the time frame? What's the pace? How aggressive are they going to be? We don't know. And that's why the markets are all over the board. So based on the information we have so far today, here's what's happening to the mortgage-backed securities market. Again, as I explained earlier, as this price goes down, mortgage rates go up. It has an inverse relationship. We love when this is green. We hate when it's red. The thing too is how much of a move is it making? Normally in a normal market, we would see this number right here move maybe 3, 5, 8. The number 8, not 30, 40, 50, 60. Okay, so this is a big number and it has continued its crash. Okay, so how is this affecting mortgage rates? Well, Mortgage News Daily does a great job and they come out with mortgage rates every day, and that's what we go over on this channel to give you guys an idea what direction is taking place and in what category. And we're going to explain more about mortgage products and everything else in future videos. But today we're going to go across here and explain where mortgage rates are for the day. Well, we have the 30-year fixed rate that you all know and hear about. It is up 0.18, and you can see that right here. We call that 18 basis points. All right. So it is now, the 30-year fixed rate is at 5.02, and you're hearing headlines, we finally hit 5%. All right, but there's more to the story. Down in here, you can see that it's going to cost you, it actually costs you almost a half a point to get that rate. So here's how this works. Right here, you're going to see 0.4 in points. So what you do is you take your loan amount, you multiply it by 0.4, and then hit the percent sign. That's going to give you how much it would cost you to get this rate. Well, rates vary Doesn't mean that you're going to get this rate. It just, I'm trying to give you a guideline on where mortgage rates are going. Just because this rate is at 5.02% doesn't mean you qualify for 5.02%. To get your exact rate, you need to call us or apply online. I'm going to give you that information a little bit later in the video. So let's get back to it. So we go through here and we see, again, I'll recap this real quick with our lingo. The 30-year fixed rate is coming in at 5.02, up 18 basis points with a cost of 0.4 in points. That's how our lingo works. So let's go across the board now. You see the 15-year fix is up 5 basis points to 4.24. It is also coming in with 0.4 in points. Mortgage News Daily doesn't post VA rates, but they're very, very compatible with FHA rates. So I usually lump these into one category. So I say the government loans or FHA/VA rates are coming in at 4.62, up 20 basis points. Guys, that's a huge move. That's almost 0.25% in the rate in one day. Okay. Then we have the 30-year jumbo coming in at 4.3, up 15 basis points. And the 5/1 ARM adjustable rate mortgages coming in at 4%, up 7 basis points. And now you can see, look at the spread between the adjustable rate mortgages that we're seeing right in here and the 30-year fixed. So if you'd like to learn more about adjustable rate mortgages, please check out my videos below and on my channel to find out more about the pros and the cons of adjustable rate mortgages. Then we go down to the trend. What is the trend that we're seeing for today? Well, when you see a negative 31, you know the trend is negative. Okay, so there's no good news coming out. And then once the Fed does come out with their information later today, we should stabilize the markets. Major concerns in the market. So if you'd like to find out more about what I do and how I might be able to help you in regards to your mortgage, please check us out on the web at therateupdate.com. If you need any assistance there, we have a bunch of data up here. But if you'd like to talk to us, please give us a call at 844-775-5626, or we have this nifty little thing right now over here that we just added to allow you to chat with us live one-on-one throughout the day. So God bless, guys. Thank you so much for taking the time to watch the video. I hope you subscribe. Check out all the information we have below, and I'll see you later today.